Hello, welcome back to Oak Business Consultant. Today we have brought you another financial model. This one is about the packaging and labeling services. This includes up to 60 months forecasting. It also includes revenue forecasted streams as well as assumptions. As you can see, assumptions includes all the relevant information such as the starting input, starting date of the company and its starting operational dates. It also includes all the text assumptions that are being used in this model. Then comes the funding assumptions. The funding assumptions includes all the relevant information about equity financing and debt financing. Then comes the revenue and cost assumption. This gives a general and more broad revenue streams about how the company is generating the revenue. It also includes a few other information such as the cost of sale, cost of goods sold, and other relevant information. Then comes the capex and opex. The capex includes all the relevant information about the capital assets and expenses and uh, its operating expenses. As you can see, that this asset lease value is connected with this. So whenever we change it, it also changes, as this is a formula sheet and this is assumed value. Coming towards the revenue analysis, as you can see, the revenue analysis tells you about the overall number of new customers, their number of order, and the revenue generated from them. It also includes the total cost of the on the revenue generated. Then comes the startup summary. The startup summary tells you about the first year of the company, its total fundings and total expenses. It also includes its assets, liabilities, and equity. It also includes a few graphs which are relevant to the and useful for the decision making. Then comes the financial statements. The financial statements include the three main important financial statements, which are income statement, balance sheet, and cash flow statement. The income statement tells you about the net income of the company generated in the in the coming 5 years. Then comes the cash flow statement. The cash flow statement tells you about the cash inflows and outflows of the company from its operations, investments, and financings. It is also based on 5 years and monthly basis. Then comes the balance sheet. The balance sheet tells you about all the assets and liabilities and capitals and their difference. As you can see, this balance check helps you to identify the total assets and total liability and equity is difference, because balance sheet needs to be balanced at all cost. Then comes the financial analysis. This includes a few financial analysis, such as break-even analysis, which tells you about the break-even sales. Then company valuation, which tells you about the weighted average cost of capital (WACC) of the company, as well as the expected equity percentage that you can offer to your investors. Then comes the sensitivity analysis, which tells you about a few scenarios such as actual, pessimistic, moderate, and optimistic. Then comes the KPIs and ratios of the company. These KPIs and ratios include all the relevant ratios such as profitability ratio, liquidity ratio, solvency ratio, and efficiency ratio. Then comes the working sheet. The working sheet tells you about all the working relevant information, relevant workings which are being used in the previous sheets to calculate overall values, such as it includes payroll, lease schedule, loan schedule, and uh, tax on payroll, working capital, and operating expenses. Then finally comes the dashboard. This dashboard includes all the relevant information and graphs that are important to in making financial decisions. That's it. Thank you.